event, really, so that you guys can just get the information that you want. People don't love attending classes anymore. I mean, give me a thumbs up if you guys feel that way. It's like, who wants to go to a class unless you're like really desperate to learn? People like to learn more from just like conversation and being able to ask questions and have questions answered. So tonight, Mike, the VA Mike drop is moderating on TikTok. I'm going to be moderating on YouTube, Facebook, and Facebook. We're on Facebook twice because we have a Facebook community, and then just Facebook on my personal Facebook account. But we are going to be teaching you guys how to use your VA loan to buy multifamily and invest in multifamily. Now, you can ask other questions as you're coming into this live. Feel free to ask questions about anything related to VA loans. The goal here is really just to be able to give you guys information, answer your questions, be available, but then also have some topics, because some people don't actually know what it is that they're trying to accomplish. They don't know that they can use their VA loan for multifamily. They don't know that they have the ability to buy land and build using their VA loan, zero down. So that's why we kind of throw topics out there, so that we're not just saying the same thing over and over again, that there's other additional opportunities and options. So without further ado, remember, post your questions in the comments on TikTok. That's how you're going to get the information that you're looking for and the answers that you're looking for. And I'm going to work to do my best. We're on BeLive tonight, which we're streaming basically through to YouTube and Facebook. So if we get anybody there from YouTube or Facebook, please ask your questions. I am seeing questions that come through, and I can answer those questions on here as well live. So let's get into it. Learning how to use your VA loan to own a multifamily home, a multifamily property. Now, it's, multifamily is kind of one of those things that not a lot of people have thought about, because it's, why would I want to buy multifamily with my VA loan? I'm looking for something that I can occupy. And in a lot of markets across the country, you can find some very nice multifamily properties. Obviously, the basics, if you're using your VA loan for the first time and you want to buy multifamily as your first, we get a lot of younger enlisted or people who have never used their VA loan before. And, they ask us, like, what would you do? What's your strategy? I'm a first-time home buyer. I've never used my VA loan before. What should I do? And then we get people that have used their VA loan before, and they want to be able to start building real estate portfolio. And they want to be able to do that with the least amount of money out of their pocket. So how do you do that with the least amount of money out of your pocket? Right now in this market, a lot of the concerns that people have are affordability, right? Home prices are higher, interest rates are higher. Now, for the record, right now, interest rates have been trending downwards, which is really good. So the market currently is heading in the right direction, which is wonderful for buyers that have been sitting on the fence and waiting, or people that have super low interest rates on their current mortgage, but they want to buy something else and they just don't want to take that leap until interest rates are a little bit closer than, to what they currently have. So, but multifamily is a great opportunity to create generational wealth, right? By starting to build your real estate portfolio. Real estate is a long-term investment. It's a long-term goal. It's not going to be a short-term gain. You might do really well on one property short-term, but it's just not something that we like to promise people, because you really need to be planning for long-term when you're looking at investing using real estate. And because you guys have earned the VA home loan benefit, you have an advantage that most civilians do not have, because it's a zero down loan program for multifamily. The seller can pay unlimited closing costs. You can buy land and build a multifamily, or you can buy a multifamily that's already existing. So if you don't find a multifamily in your market because they don't have let's talk about what is a multifamily. It's a duplex, a triplex, a fourplex. And with the VA loan, you can actually purchase a sixplex with two veterans on the loan together that are not occupying the same unit. So it can't be like your spouse, has to be someone that you're not going to occupy the same unit with. We're going to cover that in a minute so that you can see what that looks like. But basically, we're going to go over a basic overview of the VA loan benefit, who qualifies for the benefit. So active duty service member requirements. And, just to kind of go through that real quickly, if you've served active duty since 1992, if you've served a minimum of 90 days, you should qualify for your VA home loan benefit unless you had received a bad conduct discharge, a disorderly discharge. And even in some cases, if you have received a disorderly discharge, or a bad conduct discharge, dishonorable discharge, you could have received another term of service and received an honorable discharge. So quick story, we have a client, he's become a really good friend of ours. We helped him finance a home years ago in Lakewood, Washington. And he came into our office, and he had actually gone AWOL, and he had an other than honorable discharge. The gentleman had been a Army Ranger, and he had deployed 4 or 5 times to Afghanistan, and he had served. He was promised he was going to get out, and every single time they stopped, lost him, they extended his contract or re-signed him, renewed him, and he had to keep going back. And he finally got to the point where he saw some really messed up stuff. He really did not want to go back. Whatever your opinion is on the reasons why, he wasn't in a good mental state to be over there, to be honest. And so he ended up going AWOL. Well, he had his first term of service where he received an honorable discharge. And then he had this other than honorable discharge. So the honorable discharge actually trumped his dishonorable discharge. So he was able to use his VA home loan benefit with his honorable discharge, but he went to 5 different mortgage companies, and every one of them told him he couldn't qualify to use his VA home loan benefit because they didn't understand how the VA loan works properly, and they didn't understand entitlement well. So it created this dynamic where he thought he couldn't use his VA loan. He ended up using his VA loan. Now he owns multiple properties with his VA loan. As a matter of fact, he's got one property in Lakewood, Washington. I think he turned it into like 5 different rental units, and he's cash flowing the heck out of that thing. I think he's got a positive cash flow of like $5,000 a month or something like that. So he went into that multifamily kind of route using his VA loan. So active duty service requirements, you have to serve 90 days minimum during wartime, or 180 days minimum during peacetime, and you have to serve consecutively for 2 years to qualify for the benefit. If your reserves are National Guard, then you have to have served a minimum of 6 years in service, or in the Guard or the reserves, or you were activated under Title 10 orders for a minimum of 90 days. Title 10 or Title 32 orders for a minimum of 90 days, then that basically qualifies you the same as an active duty service member would after 90 days of service. And then additionally, if you're a surviving spouse of a veteran, disabled veteran, or a veteran who died during a service-connected disability, from a service-connected disability or in service, you should also qualify for the VA home loan benefit. So that's the surviving spouse portion of the benefit. There are key features to the VA loan. Obviously, there's no down payment. There's no private mortgage insurance. There's no loan limits, you guys. So if you do not have a VA loan currently, there is no county cap. So you could buy a $2 million, a $5 million, a $7 million property using your VA loan, 0 down, if you credit and income qualify for that property. And that is one of the most common misconceptions about the VA loan. Most people think that you have to have a cap. You have to stay below. Some people say 417, some people say 500, some people are closer, and they understand that there is a county loan limit. The county loan limit comes into play when you are currently using your VA loan and you plan on keeping that VA loan outstanding. So you're going to turn that house into a rental property, and then you're going to rent again, buy again using your VA loan. Then if you're going to have 2 outstanding VA loans, then the county cap now comes into play, and we have to do an entitlement calculation. But if you do not currently have a VA loan at the time that you close on your purchase, even if you have a house and it's a VA loan and you're selling it, but you don't have it anymore at the time that you close, then there's no county cap, okay? There's no minimum credit score for VA loans. VA does not actually have a minimum credit score requirement. Minimum credit scores are published by mortgage companies, by credit unions that do VA loans, by mortgage brokers who go through wholesale lenders. They will have minimum credit score requirements on VA loans. VA does not have a minimum credit score. VA says you have to have reestablished credit or established credit. And really, establishing credit doesn't even mean you can have no credit reporting on your credit report, and you can use alternative credit references, which are, utility bills. You could be paying a cell phone bill. You could be paying car insurance. You could have a car that you don't have a car payment on. You could be paying daycare. You could be paying for a Netflix account. We just have to verify those things for 12 months. But there's no minimum credit score requirement on VA loans. And so you can buy a multifamily property, a duplex, triplex, fourplex, fiveplex, sixplex with no minimum credit score requirement. Ability to purchase multifamily with no landlord experience. I get this one a lot. We hear this one a lot. Yeah, but I don't have landlord experience, so I can't use the rental income. And I'm going to show you how powerful using the rental income is to help you qualify for multifamily property, because you can use the projected rents that are going to be received on the other units that you're not occupying. Now, keep in mind, I said the other units that you're not occupying. You are required to occupy one of the units with your VA loan. VA requires that you intend to occupy as your primary residence and that you occupy within 60 days or a reasonable period of time from closing, okay? But you do not have to have landlord experience to use the income on a multifamily. We'll talk about that a little bit later. It's obviously zero down, right? Unless you're going over your county cap, over the loan limit that's available to you, and you have multiple VA loans, more than one, then it's going to be zero down. Otherwise, if you have multiple VA loans, we may need to look at how much entitlement you have available for this particular purchase. And then I've said earlier, seller can pay closing costs and debt payoff. The VA loan is the most lenient loan program out there when it comes to credit qualifying, income qualifying, and how much the seller can pay towards your closing costs and debt payoff. You're actually allowed to pay debt off at closing, paid by the seller when you're buying a house. So let's say you find a house $350,000 or $500,000. Okay, let's use $500,000 because it's easier round numbers. You find a house for $500,000. You make an offer. You ask the seller to pay the maximum the seller is allowed to pay in closing costs, which there is no max, right? So you ask the seller to pay all of your closing costs. You ask the seller to buy down your interest rate so that you can get a better interest rate. And you can also ask the seller to pay off debt at closing up to 4% of the purchase price minus prepaids. So they've already paid your closing costs. They've given you a credit to buy down your interest rate so you can get a more affordable interest rate and have a lower mortgage payment. You can also have them pay up to 4% of the purchase price towards debt payoff minus your prepaid. So 4% of $500,000 is $20,000 towards debt payoff. Now, if you take that $20,000, you're going to have to reduce the prepaids. That's the prepaid taxes and insurance out of that. So let's just say, let's take it down by $4,000, worst case scenario, and say that's what your prepaids equate to. You've got $16,000 in seller paid closing costs that the seller can pay off a credit card or multiple credit cards. They can pay off an auto loan balance. They can pay off a student loan balance, an RV loan, like whatever it is, $16,000 worth. Okay. So that is a benefit to the VA loan that no other loan program offers. And then we talked about no loan limit. So we're going to talk about that a little bit more. Why would you purchase a multifamily in this economy today? Well, first of all, affordability, right? Prices are higher today. Rates are higher today than they were in 2019, 2020, 2021. People are having sticker shock at times, at most often when they go to buy a home. And so buying a multifamily helps with affordability, because if you're receiving rental income on the units that you're not occupying, it generates income. It generates income from you the day that you close and you become the homeowner of a multifamily property. And then you can move out of it after you've occupied it. VA does not have a requirement that you stay in that house. You are allowed to move out and turn all of the units into rental units. So now you have a fully income producing rental property that you use your VA loan to buy zero down. So VA multifamily can also help you hedge against the current market. It gives you the positive cash flow, and then it offsets your mortgage payment. Okay, so I'm going to show you an example of what that would look like in offset of a mortgage payment so you can see that. There are tax deductions. There are additional tax write-offs. When you own a multifamily, you own a business. You can create an LLC, and now you have a business, and now you're a business person, a businessman, businesswoman. And now you have the ability to start building wealth through real estate investments, your real estate portfolio, while you're occupying something at an affordable price, at an affordable monthly payment for you. And there's some beautiful multifamily out there. I don't know if you guys have seen, like, there's some markets across the country that there's builders building multifamily, and they're gorgeous homes. They're gorgeous properties. And then it gives you tax write-offs because you get to write off things like, repairs that you make to the property. If you're making repairs and you're renting it out, you can write those repairs off. Whereas if it's just your primary residence, you can't write those repairs off. Talk to a tax accountant. Obviously, I'm not an accountant, so I want to make sure I'm not giving you tax advice. Additionally, because you're renting out 3 of the 4 units if you're living in a fourplex, or 1 of the 2 units if you're living in a duplex, you would have the ability to do what's called a 1031 exchange, meaning let's say you bought it for $500,000 and 5 years later, you've gained $200,000 in equity. Now your property's worth $700,000. You're wanting to cash out to get that $200,000 equity that you've built up in the property out. Well, if it was your primary residence, you have a tax break. If you lived in it for 2 of the last 5 years, you don't have to pay taxes. But if it's an investment property, there are capital gains taxes that you end up owing. Well, because there's a thing called a 1031 exchange, it gets you out of it helps you avoid paying capital gains as long as you roll the money into a like-kind property. Like-kind meaning another real estate, another investment property that you're using for investment. So it could be another multifamily, it could be a single family rental. It could be a commercial building. There's a lot of different ways that you can roll that multifamily or roll that 1031 exchange. But it is a great opportunity. And Mike and I sold a property, our first property that we did a 1031 exchange on, and we saved $50,000 in taxes by doing a 1031 exchange on that property. And that sale allowed us to buy up into a luxury purchase price and buy a luxury vacation rental that now makes gross revenue is $250,000 a year of income. So that is the opportunity that you open up for yourselves when you start looking at growing and taking some calculated risks that make sense for you in the right market at the right price, right? We're not telling you should go out and just haphazardly buy a multifamily. It has to be calculated. You have to do the research, and we're going to talk to you a little bit about some of the research that you're going to want to do. Appreciation of value. Multifamily properties will appreciate more rapidly. Now, you might see in the news right now, I'm starting to see some articles that are talking about multifamily struggling across the country. The multifamily that they're talking about is not small multifamily. They're talking about large multifamily. They're talking about apartment complexes. And the reason for that is because these loans, the commercial loans that these people used when they bought large multifamily properties, they had to use commercial financing because unless you're VA, anything over 4 units is considered commercial. If you're VA, if you're a veteran, you have the VA loan, you can go up to 6 units as a residential property. But if you're a civilian, anything over 4 units is commercial. So you're getting a commercial loan if you're buying an apartment complex, and those commercial loans have high interest rates, and they usually rewrite every 1 to 2 to 3 years. So you're having to rewrite those loans. And now that interest rates have gone up, commercial loans follow the Fed funds rate. And since the Fed funds rate jumped up drastically, commercial interest rates have gone up. So if you hear anything about the concern of multifamily, it's not small multifamily, which is what we're talking about here. Small multifamily gives you the ability to use traditional financing and have lower interest rates than commercial financing. It also gives you a 30-year fixed rate term, whereas commercial does not have a 30-year fixed rate term. So that's the benefit, another benefit. And the appreciation of value on a multifamily is going to carry a higher appreciation of value than a single family typically will, because investors that make money are looking for more doors. I want more doors. I want more rental income. I want more tenants. And the reason for that is that's how you can cash flow properties. The more income you have coming in on a property, the easier it is to cash flow the property. And you have stability of income, right? Why is VA financing superior? VA loans can be used for properties up to 7 units. Now, I said 6 units earlier. Technically, you can go to 7 units. 6 being residential and 1 being a commercial unit. The commercial unit cannot be more than 25% of the square footage of the entire building. This is a unique property type. We don't see a lot of these because there's just not a lot of them out there, but it can be done, yes. You are required to live in 1 unit while renting out to the others. And 75% of the future projected rental income can be used to qualify. So if you're buying a multifamily and maybe you're saying, I am capping out qualifying for a single family home, I'm capping out at $400,000 and I can't find anything that I want for $400,000. Well, if you roll into this multifamily world, you might be able to push your budget to $600,000 or $700,000 based on the rental income that you can now use to help you qualify by buying a multifamily property. So that's one of the reasons why we also like multifamily, because it opens up the next level of investment for you at a higher purchase price, which I'm not saying you should do if it's stretching you, if it's putting you in an uncomfortable place, if you're not in a financially stable position, it's not going to be for everyone. But there are a lot of markets in this country that our active duty military service members are stationed at that also make good rental markets because active duty service members are stationed there. And they need, for those that don't want to buy, they need to have a place to rent. And you guys know what the quality of living in the barracks is, what the quality of living in on-base housing is. It's not great. There's a lot of issues there nationally across the country. So it also is a way for you to help, your service members that you serve with to have better housing and to be a landlord that's not a slumlord. So there's also no additional credit requirements. If you're going to buy a multifamily versus a single family, there's no additional credit requirements for you to qualify for multifamily over single family. Like I said, there's no landlord experience required. If you don't have landlord experience and you're using the rental income, the 75% of the future rents on the rental units to qualify, then you will have to have 6 months of reserves. Now, when I say 6 months of reserves, that's the mortgage payment, your new mortgage payment times 6 months in a bank account, a TSP, a 401k, a stock account, mutual fund, a CD, some sort of an account that you could access if you needed to access that. That is what reserves are. You're not using the money. It's just verified that you have 6 months of reserves to basically offset the risk of you being a new landlord and using income to qualify. When you're looking at properties, you got to make sure you're looking for the right property. There's a big difference between cash flow or cash no, right? You must, and you want to have the right tailwinds for success in your journey. So, the research is important, making sure you're buying the right multifamily in the right market where the rents support qualifying for the mortgage and also the rents support the cost of the building. So you want to do your market research to understand the local market. That's really important. And that's where you enlist the help of real estate agents, property managers. You can call property management companies. If you don't have experience being a landlord, you're going to be using a property management company anyways, if you're using the income to qualify on these units. You can personally visit the market if you are unfamiliar with it. You definitely want to do this. I would always suggest that someone, if you're PCSing to a new market, you're going to be buying there. You have to be visiting the market anyways if you're going to be writing an offer. Well, sometimes not. A lot of VA buyers are purchasing sight unseen. But for you, if you're going to buy multifamily, you want to be familiar with the market if you're PCSing to a new area. Obviously, you can enlist local real estate agents to do the market research for you, and I would highly suggest that you do this. Real estate agents, that's what they're there for. They have access to the MLS, and the MLS is an incredible database of information that will show you how to understand if this is a good rental in a good market that has high rental demand, and if the rents that you're going to be charging are the right rental amounts to charge. If the square footage of the building is good, is it in a good school district that will create demand? Like all of those things, whether it's a single family or multifamily you're buying, those things are the same questions and the same things that matter. And if multifamily is not available in a market that you want to buy in, you can build it or you can renovate a single family home into a multifamily property, okay, with your VA renovation loan. So that is another option for military service members who want to be able to use their VA loan. You can renovate with a single family home into a multifamily and create more units. And I've seen a handful of people doing that on social media, and it's really cool to watch their projects go live. And it's a bit of work, it's a project. You're going to undertake a project, but if you want to be in real estate investing long-term, it's a good calculated project to take if you have the right contractors and you've done the research again. When you're looking at where should you invest in multifamily, picking a geographical area and sticking to it is important. Making sure that obviously you pick a market and a submarket that has population growth, job growth, and strong median income. Now, there are a lot of heavy military markets across the country that do create, they do meet those needs. Savannah, Georgia, Fayetteville, North Carolina. You've got job stability from the military bases, and then you've got DoD contracting companies that come in there. You've got Raleigh not too far out. You've got Clarksville, Tennessee is kind of growing into Nashville. Those areas are kind of growing together. There's just tons of markets across the country. And multifamily is a really good opportunity to kind of tap into that commercial side of real estate. Strong median income, job growth, and population growth. That's what you're looking for. So let's go over a hypothetical scenario. Hypothetical scenario, veterans buying a single family home, and let's talk about the potential benefits and challenges of a single family versus a multifamily. So if the purchase price is $500,000 on a single family home, and the principal and interest payment is $3,243 for that $5,000 home, $500,000 home, holy cow, sorry. Taxes and insurance are roughly $650 per month. The total payment on that at 6.75, which interest rates have improved since I created this slide, but let's just say 6.75, your total payment, principal, interest, taxes, and insurance is going to be around $3,893. Now, obviously, this depends on what part of the country that you're in. Now, let's look at the difference between a single family and the triplex, a multifamily. A triplex would obviously be 3 units, same purchase price, $500,000, same mortgage payment because you would receive the same interest rate whether you're buying a multifamily or a single family. You don't get docked for buying a multifamily. The rental income from 2 of the units is $3,000 a month combined, so $1,500 for each unit. Now you're in a position that your out-of-pocket expense to live in the 3rd unit is only $893 per month. When if you were a renter, you'd have to pay $1,500 for each unit, plus you would have to pay your security deposit and your pet deposit, maybe first and last month's rent, depending on how much it is that you guys are paying when you're getting into these rental properties that are off base. But that is very real. Those are the costs associated with renting. So if you were in the position to be able to buy multifamily, additionally, if you look at this $3,000 a month in income that you would be receiving on this property, we can take 75% of that and use that as income to help you qualify. So if you're at $3,000 a month, 75% of that is an extra $2,250. I'm moving decimal points myself because I know what the decimal points are on this, but $2,250 a month you can use as income because you're buying a multifamily that has rental income from 2 units of $3,000 a month. So that will increase your qualifying power quite drastically on purchasing a multifamily versus qualifying for a single family. The legal possibilities of owning more than one property with a VA loan are huge. You've got, again, if you're buying a multifamily, you've got the potential for immediate income because you're going to rent out the other units that you're not occupying. Then once you decide to move out of it, you can move out and go and rent out the unit that you were occupying. And now you've got a fully income producing property. I would put the property in an LLC to protect yourself. That's not hard to do. Attorneys can draft an LLC, and now you've got a business. Now you've got business tax returns. You can file it as a Schedule C. You can file it as a partnership, depending on how you got that structured. A sole owner. So there's a lot of opportunity there. We've talked about the occupancy requirements. It's obviously a VA loan, so you have to own or occupy the property, right? You have to intend to occupy the property as your primary residence, and you have to occupy within 60 days or a reasonable period of time from closing. And property management companies, there is a benefit to using property management companies. Property management companies, the first 12 months of owning your rental, your multifamily, a property management company is going to help you learn. If you get the right property management company, and that's what's really important, you want to make sure you get the right company, because a bad property management company can make it a bad experience. And this is why, you're going to want to make sure that you do vet out your property management company. You look for the right people. They follow up, they give you calls back, they have good reputation, they've got good reviews online, they've got good feedback. And you guys can imagine if you find a property management company that has good references online, it's probably a really good property management company, because what renters like their property management companies? It's very rare. But if you're buying and you're using the rental income to offset the mortgage payments and you have not been a landlord, then you are required to use a property management company in your first 12 months of ownership. So be prepared for that. And it's not a bad thing, I promise. It gives you the opportunity to have a soft landing. It gives you a team of people that understand legalities of renting in that market. They understand what the lease needs to look at. They will do your walkthroughs with the new tenants. They will look for your tenants. They will screen your tenants to make sure that they have good references and they pay their bills on time. They will also do any mechanical or repairs that need to be done to the property. So they will take care of all that stuff. And especially for active duty military, if you're PCSing, if you're TDY, if you're deployed, you need a property management company that's going to take that stuff off your plate and not have to, you don't have to handle it. Now, if you're living in the same market and after 12 months, you want to manage your own property, then great. You've learned, you've been able to watch. You can ask the property management company to help walk you through it and guide you and educate you while you're going through the process so you can learn. House hacking is the ultimate catalyst for wealth. When you're purchasing owner occupied, it gives you the opportunity to get into the property zero down. And that's why multifamily as a veteran or active duty service member using your VA loan is so powerful. You want to create an action plan for purchasing multifamily properties. Obviously, you're going to purchase using your loan, occupy the property for 12 months. After 12 months, you're allowed to reuse your VA loan with your remaining entitlement. So you can move out after 12 months, or if you get orders in less than 12 months, you're allowed to move. So, or if you have a family size change. I have a family that I'm talking to right now. I talked to them this morning, and the gentleman owns a house already in Houston. He owns a lot, and he wants to build a duplex on that lot. His units, square footage for the 2 units that he's building are going to be about 1,900 square feet. His house right now is 1,500 square feet. His house right now is an older 1950s home. He has a 3-bedroom, 1 bath, but he's got grandchildren living with him. And it's not convenient to have other people living with him with 1 bathroom. So he's going to be able to move into the duplex after he builds it, occupy that, and then rent out his single family home that he has now. So there's a lot of different strategies that you can use because you have access to the VA home loan benefit, which is such an advantage, again, over civilian buyers. Managing your investment properties, the property management companies will do that. They will help you with the financial breakdowns, the income potential. They're going to help you figure out what the pricing should look like on your rentals, how much you should be renting it out for, what is the current market support. They can help guide you through that process. They typically charge 8 to 10% for their monthly fee. So if your rental income for 1 unit is $1,500, they're typically going to charge 8 to 10% of that. So anywhere from $100 to $150 for that unit. And that's also an expense that you can write off when you file your taxes at the end of the year. Confirm that with your accountant. Again, I'm not an accountant, but that is what our personal experience has been. And that is what we have seen from other service members. Benefits of using a property management company: it frees up your time. It ensures compliance with local and state laws, landlord-tenant laws, so you don't get yourself into a bind. It helps with the management of the finances, the management of the maintenance, locating tenants, screening tenants, the check-in and check-out process, any repairs that need to be done when a tenant moves out. They can handle all of that. You can still refinance a multifamily property that has a VA loan against it. So if you buy today at, let's say, 6.5, 6.25%, and in 12 months down the road, rates are at 5.25%, and you can lower your rate by 1% and save $150, $200, $500 a month, depending on the loan amount, you can refinance that property. You don't even have to be living in it to refinance that property using your VA interest rate reduction refinance loan, which is also great, incredible opportunity. The VA IRRRL, the interest rate reduction loan. So for anybody that's on here that has been thinking about refinancing, the VA IRRRL is the best way to do that. If you're not trying to take cash out, if you're trying to take cash out, that's just going to be a regular VA loan. But if you're just trying to lower your interest rate, and that's the whole purpose of wanting to refinance, then your IRRRL is going to be the opportunity for you, the benefit that you want to use. And the IRRRL is no appraisal. You don't have to have an appraisal. We're going to refinance the loan. So we're going to pay off your current mortgage company, and then you're going to end up with a new mortgage loan with a new mortgage company. You do not have to reset your term. A lot of people are like, well, I've already been paying on this mortgage for a year. I don't want to lose all that money. You can shorten your term to 29 years. You can shorten it to 28, 27, 25, 20, whatever it is that makes you comfortable, and how those payments calculate out. You can shorten your term and have whatever term you want. You don't have to provide income documents again. So when you initially qualify for a VA loan and you purchase something, you have to provide income documentation. On an IRRRL, you do not. You don't have to provide asset documentation. There's typically no cash to close out of your pocket. Closing costs are rolled back into the loan. You usually skip 1 or 2 mortgage payments. You could lower the goal is that you have to lower your interest rate when you're doing an IRRRL. You have to lower it by at least 0.5 percentage point. You do have to wait. Somebody's asking how long do you have to wait to refinance? You do have to wait 210 days from the date of your first mortgage payment due date. So if you closed in October of last year, you skip November, your first payment was due in December. That's December, January, February, March, April, May, 6 mortgage payments, and then 210 days from your first payment due date. Then you can close on your new mortgage, and you can actually, the refinance, you can actually start the process before you hit that 210 days. We just can't close you until you hit that 210 days. And it is allowed on investment properties. So if as long as you occupy that property that you have with a VA loan, and if you've moved out of it, you can refinance it using an IRRRL. It's not an issue at all. And they don't even charge you a premium for that. If you were looking at a conventional loan and you're no longer living in it and it's an investment property, you're going to pay a 2-point adjuster, maybe even a 2.5% adjuster, meaning if your loan amount's $500,000, you're paying $10,000 to $13,000 in adjustment fees to get that same interest rate that you would if you were occupying the property on a conventional loan. VA does not charge that. At least we do not. Some investors will charge that, but our company does not. So what are some common pitfalls and how to avoid them if you're buying multifamily, if you're looking at investing in real estate? Mistakes to avoid in real estate investments, tips for success. Some of the mistakes that you can make are overbuying, right? Buying outside your comfort zone. Making sure that you buy something that is within your comfort zone, that you have an exit strategy. If for some reason you can't rent it out, that you can make the mortgage payment on it. If you can't rent it out as a long-term, you can short-term rental. You can short-term, mid-term, and long-term rent. Those are all options. So Matt's asking, are the closing costs about the same for the initial VA loan, given it's not out of pocket? Yes. For the initial VA loan, you're talking about for the purchase, the closing costs are going to be different in different states because some states require certain fees to be charged on a purchase, but not on a refinance. As far as the lender fees, we don't charge lender fees on our VA loans. So we do not have a lender fee on our VA loans. We do have third-party fees. There's always third-party fees, right? So Matt, you don't have an appraisal, so you save the appraisal cost, but you still have title and escrow. You still have to pay for a settlement fee. There is a VA funding fee on a VA refinance unless you're exempt from the funding fee because you have a 10% or higher VA disability rating. If you have a 10% or higher VA disability rating, then you do not have to pay the VA funding fee. So what other mistakes to avoid in real estate investments? Overbuying, right? Spending too much on a property. Buying in the market that is, maybe doesn't have the stability and job growth for multifamily. Buying something that is in disrepair and not being prepared to have to fix or update things, fix the appliances, fix the heating, if the roof is leaking, things like that. That's why it's important to have a home inspection. A home inspection will help you avoid buying something that is a money pit. Other real estate investment mistakes that people make. I would say, buying the most expensive house in the neighborhood. You typically don't want to buy the most expensive house in the neighborhood unless it is unique and is going to be able to retain its value. And the reason for that is when you're buying the most expensive house in the neighborhood, you have no upside, and that's another thing that's really great with multifamily is if you can find something that actually has an upside potential where you can actually repair. Some of the strategies and tips for success when you're looking at multifamily is you buy something that needs new carpet. Maybe it needs an updated kitchens, updated appliances. And once you update them, you can increase your rents. Oftentimes you can make out really well if you buy the right property that needs updates, that needs some cosmetic work, but you fix it up and now you can increase rents because people love new features inside a rental property. You can put in the LVP, the luxury vinyl flooring. I like that for rental properties because it withstands, a lot of traffic. It's not carpet. It's not going to get ruined with pets or not with pets, with kids. So You could also look at, if you have a rental property, multifamily, you could also look at putting a washer and dryer in each unit and leasing the washer and dryer out and charging extra for the washer and dryer in the unit because you bought them and now you're able to pay that back and now make a profit off of the washer and dryer. So some people will also charge for the premium parking spots on a multifamily. You can charge extra if there's premium parking spots. If there's some garages and not all the parking spaces have garages, then you could pay premiums or charge premiums for the parking space, the garage parking space or covered parking space. So there's a lot of different strategies you can practice on ways to increase cash flow with multifamily. You just have to learn and understand and be working with the right professionals, real estate professional and mortgage lending professional that have experience, that understand multifamily. And we see a lot of people go from buying their first fourplex to, trading that in or buying multiple multiplex properties and then going into apartment complexes. And then they're going into like big developments and other things because they've taken money and leveraged the money that they've made and put it into other properties. Now, obviously, you have to be smart about that. You have to make smart decisions. And with any investments, there's risk, but it gives you a lot of opportunity with your VA loan to get started. And if you're, in a military market area, a military specific area that has a market for rentals, then it gives you the ability to do that. I don't know if you guys have ever heard about traveling nurses. Traveling nurses need rental properties. And there are websites that specifically market to traveling nurses so that you can short-term or mid-term rent out to traveling nurses by having, a furnished property. So not all markets is that going to work in, but some markets that will absolutely work in. And that could be a very good, looks like I lost connection for a second. Could be a very good tenant when you're looking at like a multifamily strategy. So there's a lot of strategies that you can put into multifamily purchases. But with the VA loan, the cool thing is you have all the ability to be able to do these things. And there's a lot of VA resources and real estate investment tools and calculators and books and websites and forums and podcasts that you can listen to that will help you strategize and learn if you want to understand more before you take that leap into the multifamily space. But if you're asking, if you're a first-time home buyer right now and you're active duty and you're receiving BAH, or you can get approved for BAH and you can get a multifamily property, I say it's one of the best investments that you're going to make as long as you buy it right. Because having multiple doors, having rental income coming in day one, having the opportunity to generate income and buy something that other investors and landlords are going to want to buy down the road because they see income potential in it. Everybody's trying to figure out ways to make income, to make more money and not have to work as much. That's just like the theme right now. Everybody wants to try and figure that out. Well, if you look at wealth in the country, homeowners have, I think it's 4 times the net worth of renters. I tried to say this last night at like 11:30 at night, and I could not get that off my tongue. But the net worth of homeowners is like 4 times that of the net worth of renters. And there's a reason for that, because there's appreciation of value. And you guys, even with, inflation, you're always hedging. Real estate is a good hedge against inflation because you have a tangible asset. You have something that is a building, and people are always going to need places to live. And you're always going to have people that are afraid to buy and don't want to buy. You're always going to have people that will be renters their entire life. And they will never be, typically, they will not be super wealthy. Every once in a while, you hear a crazy story about somebody that lived in a rental and, put all their money away, and they died with, $30 million, and they bequeathed it to some school or, something like that. But that's what I said it. I'm learning some new real estate terms because I have to take the Florida real estate exam for our own real estate investments. We're selling a couple, and I've had the Washington state license for years, but I'm flipping it over to Florida, and I used the term bequeath, which sounds gross, actually. So that is the multifamily presentation. I'm going to flip the camera around now so we can just keep answering questions for a little while, because I feel like that was a pretty quick little class. I don't know. What is it? 8:45. Yeah. 8:45. So I know there's been an audience of people asking questions, but what other questions do you guys have this evening? Any other questions about, I know Mike's been answering questions, but any other questions about VA loans? Obviously, with any real estate purchases, whether it's the multifamily or the single family, it's really important to have a solid team. The team will matter. They will matter in making sure that you get the best deal possible from your real estate agents, to your lenders, to potentially your home inspectors who you're using to do the home inspection on the property. There's some tips I have for selecting the right professionals. You got to make sure that you are working with people that have good references. They have to have, experience. And I hate to say that because I know what it's like to be new in the industry, both on the mortgage and the real estate side. I, started a long time ago, and everybody's new at some point and everybody has to learn. But you need to be working with a team then that is very seasoned and has a process and a structure and a path for you to be able to learn. Otherwise, you're kind of just stumbling through it. And unfortunately, in real estate, that is something that can be more dangerous in real estate, in mortgage too. But I think mortgage teams tend to have larger groups that are watching files and making sure the process is right. And it goes through the underwriting and it goes through other things. The real estate agents don't have an underwriting process. So real estate agents don't really get that check. They do have broker reviews. Brokers will review their contracts when they come in. But it's really important to make sure that you're working with real estate agents. And as VA buyers, it's really important to make sure you're working with real estate agents that understand working with military families. And as you guys may have heard, real estate commissions are the structure, and the way that is looking and has been handled for VA buyers is going to change coming up in August. I think it's August 10th. The new rules go into effect. And VA buyers have the ability to pay their own real estate agents commissions after August 10th. Until then, it's business as usual. So if you guys are thinking about buying, it might be better to get under contract before August 10th, just so you don't deal with any of the other, unique stuff. Not all markets will change. A lot of markets are going to still handle business as usual, still be very similar and very much the same. But there will be some markets where we see real estate agents, the seller is not wanting to pay the real estate commission on both sides of the transaction. So that's going to be an interesting new hurdle that we will be facing in the mortgage world. How do you know what you qualify for using projected rental income from tenants? That's a good question, Kevin. So that's kind of a study that we have to do when, first of all, we always pre-approve you, right? That's the first step to any purchase. So first step, we're going to pre-approve you. And once we've pre-approved you, let's say we pre-approve you for a budget of $700,000. Now you go out and you start looking at multifamily properties. Well, you have to figure out how much rental income are these properties, producing. They may, if it's a multifamily, they typically already are being rented out, and you have to figure out which unit you're going to live in, you're going to occupy, and then you're going to look at the other units and you're going to figure out, okay, those other units are producing, this one's generating 1,700, this one's generating 2,000, this one's generating 2,100. And then you're going to talk to your real estate agents and figure out what could they be generating, right? Is that current for the current market? A lot of landlords hold good tenants at an under market rental amount because they're good tenants. And so they don't want to rock the boat. They don't want to push them out. They don't raise the rents. They just hold them there because they've been great tenants. I've rented to them for 10 years. And so they haven't really raised rents on them. And not that you want to be the jerk coming in and raising rents right away, but if you're buying a property and it's a business transaction, unfortunately, sometimes raising rents happens. And based on current market, maybe you don't raise it all the way to current market. Maybe you go, okay, well, this property supports a $2,200 value for rent. I'm only going to increase your rent to $2,000, $2,200 versus $2,000. So I'm going to cut you a deal. But, the MLS can show the amount of rental income that these multifamily properties are receiving. So that's one place. The MLS can have that information. Additionally, you can get that information from, obviously, when the appraiser goes out and does an appraisal of the property, there has to be a market analysis, a rental analysis done by the appraiser on any multifamily purchases. So the appraiser will tell you what appraised fair market value is, which isn't always what they can pull for rent. but the appraiser will talk to the real estate agent, the listing agent, and they'll find out what are the current tenants paying for rent. And then the other place that you could go is a property manager. I would be looking at trying to find a property manager. If I'm buying multifamily, I'd be looking at property management companies in that market. And then I'd be talking to a property manager before I solidify an offer on a property. I'd be talking to a property manager, finding out, okay, how much is the rent, potential rent on this property? How much can I receive for rental income? What's the high point, the low point, and getting a pretty good idea of what that looks like so that and you're more knowledgeable and confident in what you're going to be receiving for rental income. But it's typically the appraiser or the current lease agreements that we're going to use for qualifying the amount for qualifying for projected income. So that's 75%. I want to build, but the VA agent told us the VA loan wouldn't do that. So we just settled on buying. Marine Force, this is a very good example of lenders having different answers to information and questions for veterans because that mortgage company probably doesn't have a VA buy land and build program. We happen to have a VA buy land and build program. And there are some other lenders out there that offer the program, but most of them are brokering it to the wholesale lenders that offer the program, and it's not a great experience. We've heard nothing but nightmares, and we've actually tried to go through it ourselves personally, and it was not good. So, but yeah, you're going to hear that. A lot of mortgage companies are going to tell you that the VA loan, one-time close, you can't buy land and build with the VA loan. And that's just not right information, unfortunately. And that's one of the reasons why it's really important to get second opinion when you're getting information or answers when you're buying using your VA loan or you're financing, you're shopping using your VA loan. There's just so much misinformation out there. So you want to make sure that you get a second opinion and have, VA loan specialists answering your questions because there's a lot of lenders that don't actually specialize in working with VA buyers, but they have opinions. And unfortunately that puts, our veterans in a disadvantaged position a lot. So I'm sorry to hear that you wanted to do it, but you couldn't. You still have the ability to buy land and build. If that's something that you still want to do, you're not like disqualified forever. Even if you have another home, you can still buy land and build. I think I just saw Haley. Hi, Haley. How are you this evening? I'm going to stop my Be Live. So if you guys are watching from YouTube or Facebook, thank you so much for attending. We appreciate you. The only questions I saw were comments that didn't even make any sense. I didn't answer any of those questions. It was from one person, so I'm thinking it was probably spam of some sort. But we appreciate you being here. Reach out if you have any questions. You can go to VALoanBish.com to connect, or you can click on the link in my bio. In most of these social media accounts, you will find a way to get in contact with our team. And we do lend in all 50 states. So I think that's really important. I didn't talk about that earlier on. Veterans Lending Group, we are a national VA lending team. We are national across the country. We do lend in all 50 states. We do thousands of VA loans per year. 65% of our staff are prior service or active duty military spouses. And 90% of the loans that we close are VA loans. So this is our specialty. We do VA loans all day, every day. And that's why we are here educating our military service members, because unfortunately, they don't give you the information that you need in order to be successful using your VA loan benefit. VA doesn't have the time or the resources to educate you. And honestly, people teaching like TAPS and ACAP and the classes on when you're transitioning out, they don't know the facts of the VA loan benefit. They don't know your actual information. They don't know the details and the truth and the facts about your VA loan. So even if they are teaching those classes, 9 out of 10 times, they're not 100% accurate. We do have a couple team members with our veterans resource team. It's a group that goes and just educates veterans about their benefits. We do have a couple of those gentlemen that go and teach TAPS classes in San Antonio. So if you've transitioned out lately from San Antonio, you may have sat through a couple of our instructors' classes where they are teaching you accurate information about VA loan benefits and your VA home loan. Nicole's watching from YouTube. Thank you, Nicole, for being here. We appreciate it. Will this be able to be reviewed later? Oh, you came on late. So we did record this, and it will be posted on YouTube. Yes, you will be able to log back into VALoanBish on YouTube and rewatch this. So Nicole, let us know if you want a one-on-one consultation. If you have any other further questions, we're happy to answer those questions for you. And is it still required to have contractors for the one-time construction loan? Atafua, as of right now, yes. we are digging in on this. We are trying to see what we can negotiate to have veterans being able to be their own general contractors. But so far, we haven't seen any mortgage companies that are willing to do that on the one-time close construction loan. And it's kind of, I know it seems like if you have a construction background and you've been a GC in the past or a project manager or a superintendent for a construction company, it makes sense that you would want to do it. Just being anybody else, it's a big undertaking to manage to be a general contractor on a build project from start to finish. Like, that's a big deal. And, it comes with a lot of risk. If things go wrong, it could end up being a dangerous